Hey there, and thanks for joining. Today we're going to talk about credit, how it affects a home loan, the type of loan you can get, the interest rate on that loan, and if your credit's not up to par, we're going to talk about some ways to fix it, and we get started right now. So having a good interest rate on your home loan is just the best thing ever. So just went into escrow yesterday with a buyer who has excellent credit, and his rate was 2.73%. I think it was 3. It might have been 2.76. It was 2.7 something. Are you kidding me? That is just unheard of. Literally nobody you know has that rate unless they got it today or yesterday. So that's a big difference. That means his mortgage payment is going to be lower. That means his debt to income ratio is going to be lower because he's paying less for his mortgage, which means he will qualify for more house if he so chooses to, go bigger. So bottom line, I got some wildlife going on out here. Excuse all the noise. So bottom line is, the better your credit, the better interest rate you'll get, the less money you'll spend on interest. The money is cheaper to borrow. You'll have more in your bank account at the end of the day to do other things. So the first type of loan we'll talk about is FHA, which is the federally backed home loan program. So think 580. That's your mark, 580. If you're above 580, you can put 3.5% down and you'll qualify. That's a pretty low down payment. If you're below 580, you can still qualify, but you will be required to put more money down, probably more like 5%. Again, talk to your lender, or if you need one, talk to me and I'll find you one. But that's the threshold for an FHA loan. Now, a conventional loan, which is what we see more of, is for higher qualified folks or more credit-worthy folks based on your credit score. So 660 to 680, somewhere in there is that range. We can find out. Again, that moves based on whatever factors they use in their algorithm there. But right now it's 680, I believe. If you have a 680 score, you qualify for conventional, which means you can put 3% down, really, really low. And the higher your credit score, the lower your interest rate still. So you can get under 3 these days, which is 3%, which is just insane. The other two loans that I'll talk about are VA, which is veterans. If you're serving now or if you have served and were honorably discharged, you qualify. And that's no money down. And I'm not sure of the credit requirement on that. I'll do some research and I'll comment below, and I'll maybe even pop something after the fact in this video so you can see it maybe over here. But and then there's the USDA. Yeah, same USDA as the Department of Agriculture. Those are for rural loans. We don't see a whole lot of that here because we're in a big city, so there's not a whole lot of rural stuff around, but some properties do qualify for USDA. I don't see that a lot. Don't have a whole lot of information on that, so I gotta kill that one. But those are the 4 types of loans, and mostly we deal with FHA and conventional. So now that you know the different thresholds there, let's talk about what it takes to get there. So we're going to talk about fixing your credit now. Now, you don't need a pro for this. You can do it yourself. It just basically depends on what type of damage there is on your credit report. So your credit history, if it's just debt, if it's just you are maxed out on your credit cards. The way to get your credit score up by a considerable amount is to bring your debt down to the 30% threshold or less. So let's say you got $10,000 in credit limits combined over 3 or 4 cards, or maybe it's just one, but let's use a nice round number of 10,000. That's your credit limit. And if you're maxed out, that's going to really negatively affect your score. If you brought those balances down to 3,000 or 30%, you would see a significant jump in your credit score. That's what I did. My credit was in the toilet, and I just paid off a bunch of debt, and it shot through the roof. Now, you may have something on there more serious than that, something that dates back a long time, things that have gone into collections, all that kind of stuff. That's going to be a big job to try to do. You can do it yourself, but you need to do the research. You need to study up on it and know what you're doing, and be proactive in getting that done. Now, there are services out there. Professionals can do that for you. In fact, I recommend them if you're in bad shape. If you're down in the 4s or lower, or even in the 5s, you may need some professional help. It's not really expensive at all. I mean, for a few $100, you can get on the right path to getting your credit to being not just acceptable, but exceptional. So again, we're talking, let's say it was a $500 or $600 investment that brought your credit from poor to excellent. You'll see that savings in a couple of months on a mortgage payment with a bad or a high interest rate versus a really good or low interest rate. So you can do it yourself, or you can hire a professional. So if you need some help, please reach out to me. If you found this video helpful and you want to see more like it, please subscribe to my channel. Hit the bell icon to be notified when I post new videos, which I do every single Wednesday. And I'm glad you watched. I hope it, like I said, you found it helpful. And we'll see you next week.